Well, it is officially happening. Americans have simply stopped making payments. This is turning into a massive issue. But the issue that we are currently facing with people not making payments, this is going to balloon up. This is going to actually snowball and create more and more problems. And I'm going to explain exactly what those problems are going to look like in the coming months. But let me break this down, explain what is going on, and show you the report that came out just recently and how this report is actually scaring lenders. So, if you currently have any type of loans, whether it's a car loan, a home loan, you have credit cards, student loan, medical debt, you need to watch this video because this video is going to open up your eyes for what's coming. So, look at this. It says, this is an article from Forbes. It says they're skipping car payments. That's the final warning sign. Okay, what does this mean? Well, here's what I can tell you, and then we'll read a little bit of the article. First off, people stop making payments on their cars as one of the last resorts. Okay? Because people need a car to get their kids back and forth to and from school. They need their car to get to and from work. They need their car to get to the grocery store and just to run other errands. So a car is one of the most important things that a person could have. Granted, they don't need a car payment of $800 or $1,000 a month, but they do need some type of transportation if they're not using public transportation like buses and subways and things like that. But here's the scary part. We are seeing people are not making payments on their cars. They're skipping payments. The last thing people skip, the last thing people stop making payments on is their home. That's a necessity. So the home is the last thing. A car is the second to last thing, which means Americans have already stopped making payments on credit cards, on student loan debt, on medical bills, on utility payments, on RVs and side-by-sides and jet skis and boats and just other loans. They have simply stopped. That's a problem. I want to read a little bit of this article and then explain how this is going to kind of snowball into a bigger crisis. Listen to this. It says the headlines say inflation is easing and jobs remain strong, but consumers are skipping car payments. The Fed claims to be data-driven, but if you're watching behavior, not just backward-looking numbers, the signals are flashing red. Last month, I highlighted how mortgage delinquencies are rising fast. That piece resonated because it cut through the noise. By the time the official data confirms it, you're already late. Smart investors look where others aren't looking. And that's exactly right. The Federal Reserve is looking at numbers from the past. They aren't projecting numbers for the future. That's not what they're going off of. They're going off of previous numbers. The problem is they're already a month, 2 months, 3 months, or even 6 to 12 months behind. That's part of the issue. Let me read this to you. It says, now we're seeing it again. This time in auto loans. Delinquencies, especially among subprime borrowers, are spiking. This matters. People will skip everything else before they lose their car. That's how they get to work. If they're missing payments now, the strain is already severe. The Fed says it's data-driven, but when consumers start skipping car payments, it's no rounding error. It's a flashing alarm. LendingTree reports 5.1% of Americans are now delinquent on auto loans, with 2% at least 30 days late and nearly 1% over 90 days late. That's not just a trend, it's a red flag. Okay. Like I said, if you are missing your car payment, that is the second to last thing you miss. The final thing you miss is your home loan. When home loans, along with car payments, along with student loan debt, along with medical bills and credit cards and every other loan out there, when you are now behind on all those things, there's no coming back. It's just going to be almost impossible. But here's the reason why this is such a big deal. Okay? The problem is that when banks are not getting paid based off the money that they've lent out, then banks can no longer loan money. They stop. There's an issue. Okay? So when you stop making payments to the bank, or when many people do, the bank has to tighten their lending requirements. They have to ensure they have more money, on the books, saved up, just in case. Okay? They have to have money in reserves just in case you're not paying, because the last thing the bank wants to do is have a liquidity crisis, have a even a bigger lending issue, and then the bank goes under. Okay? That's what the bank doesn't want. Now here's the problem. If a bank cannot lend you money, that means you're not buying homes, you're not buying cars, you're not opening up new lines of credit, you're not buying anything else like that, and lending completely stops. When lending stops, the economy comes to somewhat of a halt. When the economy comes to a halt, that means that layoffs are just around the corner because businesses can't survive. Well, you're probably thinking, well, that's not a big deal. It's a huge deal, because when people are already not making payments because prices are too high on homes, on cars, on food, utilities, and so forth, guess what happens when they lose their job? Probably thinking, oh, they just go get a new job. They try. But what happens is they're probably 3 to 6 months at best from getting a new job. Meaning they have to count on their savings. The majority of Americans cannot afford a $1,000 emergency. There's no way they can afford 3 to 6 months of expenses. It's just not going to happen. But I want to play something for you. I was watching this TikTok video just the other day, and I thought this was interesting because this is exactly what we're seeing, what this person's going to say. Listen to this right here.
I am still shocked how many people in my comment sections are underestimating how cooked the corporate job market is. I've been in recruiting for coming up to a decade in July, and I've literally never seen candidates struggle as much as they are right now on the job market. And these are not poor candidates. These are not people who are unqualified. These are some of the most qualified people I've ever seen on the job market, and they are struggling. I'm hearing about people who are applying to thousands of jobs and not hearing anything back from any company. I'm hearing about longer and longer rounds of interviews, like 6, 7, 8, or 9 rounds of interviews. And some people go through that and then they get ghosted. I'm hearing about assessments, like personality assessments, take-home work, which a lot of times is unpaid. And I'm hearing about this over and over. And then when it comes to the offer stage, I'm seeing people get intentionally lowballed.
Now, I want to explain something. We have seen this. This is nothing new to 2025. This is what we experienced back in 2024 as well. The only issue is now more and more people need a job. Not want a job, absolutely need a job. Well, here's something that is actually causing people to panic. They're applying for all these jobs. They're going into different interviews. They're spending money on gas and travel, and in some cases trying to go to getting on an airplane, flying to a certain city to go and take part in an interview. And then they realize it's not just a quick 30-minute or hour-long interview. This is a multi-part interview that could potentially take weeks or months, meaning somebody has to keep flying back in or traveling to that specific city. Now, that is in certain cases. But here's what's happening in many other cases. You apply for a job, and one of the final steps is they take all the prospective candidates and the ones they like, and they ask you to do a background check. Okay? And they want you to do a background check and possibly even a credit check. And in some cases, it costs a little bit of money. And they tell you, okay, go do this. You're going to pay the $15 to $25. Just do the full background check, and we'll be good. Probably think, well, that's not a big deal. Remember what this person just said. People are applying for hundreds of positions. Okay? They go into dozens of different interviews. What if you went into 10 different interviews and you had to pay $25 every single interview to do a background check? That's $250 you have to pay out of pocket just to go through the interview process. This is why it's an issue. And again, this is just part of the problem. Okay? Meaning you don't have 3 to 6 months of emergency funds saved up, so you can't continue to go and look for a new job and do this and do that and travel and buy new clothes and make sure you look presentable. No, because you still have to make that car payment. You still have to make that home loan payment. You still have to pay on your credit cards and your student loans and your medical bills. You still have to pay all those things. This is why people have simply stopped making payments. They're trying to look at the upside to everything. And just think about this for a second. You have to choose between potentially a job, and so you have to pay the $25 background check fee. That's on one hand. Or you make a payment to your credit card of $25. Most people are going to think positive, and they think if I just pay this $25 fee, do the background check, hopefully I get a job, and then I can make more money and I can pay off that credit card, not just pay $25. But then there's others that say, you know what, I have to make that credit card payment. I can't be late on that. And then they don't get the job. I'm not saying this happens everywhere, but this is just the warning signs that we're seeing. Again, the whole economy, this is intertwined together. People are not making payments. Banks will stop lending. As banks stop lending, businesses will stop hiring. As businesses stop hiring, they will eventually lay people off. As they lay people off, the whole cycle continues. Then those people cannot afford to make the payments. The bank struggles even more. The other businesses will start to lay off more employees. And again, it goes around and around and around. So, let me ask you this one question. Have you ever had to decide between making payments to a credit card company or your auto loan or your mortgage, or potentially get a job, put food on the table, and pay for your utilities? Let me know down in the comment section below, because I guarantee you 90% of Americans have had to do this exact same thing. I have too.